Welcome back. We are now in segment 5.3, and in the segment we'll be discussing another item on the P&L account, that is raw material. So in the previous segment we have discussed the first item in P&L account, that is sales. We have discussed the concept of gross sales, excise duty, net sales, and non-operating income. So we'll move on to another item of the P&L account, that is the raw material. It's also a very important item, so please pay close attention. To understand the concept of raw material, so what is the figure we're actually going to take in the raw material for CMA data? You can understand the concept of matching concept. This we have already discussed in your in an earlier chapter when you discussed accounting concepts, right? One of the concepts we have discussed is the matching principle, and where we said that we have to match revenue and expenses. So we're going to revisit the concept once again. Unless we are clear about that concept, we cannot go ahead with the discussion of raw material. Let us take the example of a shoes manufacturing company. So this is a company that is manufacturing leather shoes. So the raw material for this company is obviously leather, right? Say the company has purchased 1200 square meters of leather during this year at the rate of 100 rupees per square meter. So the total cost of purchase is 1200 into 100, that is 1.2 lakhs. So this is the purchase cost. So the company has spent 1.2 lakhs on purchase of raw leather during this year, and the plan was to manufacture leather shoes. However, it so happened that company could not sell all these shoes. The company had manufactured shoes with this entire raw material. So all the raw leather has been converted into shoes. The entire 1.2 lakh worth of raw leather has been converted into shoes. But the shoes themselves could not be sold. How many shoes could not be sold? So the total 1.2 lakhs, or rather let us speak in terms of quantity. 1200 square meters of leather was purchased. Of this, the company has produced some shoes, right? Let us assume that the company has produced 100 shoes and 20 shoes. Let us assume that the company has manufactured a total of 120 shoes. So out of these 120 shoes, the company could sell only 100 shoes and 20 shoes were left unsold. Is the point clear? The scenario is the company has purchased a raw leather amounting 1.2 lakhs. In quantity terms, this is 1200 square meters. So out of this 1200 square meters, the company has, from this 1200 square meters, the company has manufactured total 120 shoes. Out of this 120 shoes, the company could sell only 100. The company could sell only 100 shoes, and it could not sell 20. So this 20 is lying in the godown. This 100 is already sold and sent to the customers. So to manufacture these 100 shoes, the company has utilized 1000 square meters of leather, and to manufacture these 20 unsold shoes, the company has utilized 200 square meters of raw leather. Put together, this is the 1200 square meters of raw leather which the company has purchased. So the entire purchased raw leather has gone into manufacture of shoes. So are you clear with the scenario? So the entire leather has been converted into shoes. There is no raw leather left. The entire raw leather has been converted into shoes, but all the shoes could not be sold. So you can say out of the 1200 square meters the company has purchased, 1000 square meters has gone to the customers. Of course, in the form of shoes, not in the form of raw leather. We have converted them into shoes. So out of this 1200, 1000 square meters has gone to the customers, and 200 is lying in the godowns in the form of shoes, right? So forget about which form it is, whether it's raw leather or shoes. But in a sense, this out of this 1200 which the company has purchased, 1000 has gone out of the factory into to the customers, right? And 200 is still in the factory in the form of shoes. So this is the scenario. So the company could sell shoes for which has utilized only 1000 square meters for raw leather. Let us assume that cost is 1 lakh. Obviously, the total is 1.2 lakhs, and 1 lakh is the cost of raw leather for which the shoes were manufactured. So you have to understand here that though 1.2 lakhs was purchased, right, we are not going to show this entire 1.2 lakhs in P&L under the head of raw material. This is the point which you are going to understand as we go along. This is as per the matching concept. Please note that the purchase cost is immaterial. So you could have purchased 1.2 lakhs or 5 lakhs or 10 lakhs or 100 lakhs. It doesn't matter, right? What the matching principle says, you have to match the sales and expenses. You have to do a matching here. Drop the P&L account for this scenario, or the sales, and we have the expenses. So let us see the scenario. We have, once again, we have 120 shoes, of which 100 were sold and 20 were unsold. Let us assume that the selling price was of each shoe was 1,500. So we're speaking of an amount of 1.5 lakhs, right? So this 20 anyway is not sold. This is not sold. So when you're speaking of sales, these 100 shoes were sold for 1500 per piece. So a total income of 1.5 lakhs was realized. So this we enter in the sales column of the P&L account. Now we know that we have discussed that to purchase the 1200 square meters of leather, we have incurred a cost of 1.2 lakhs. So the question is, should the expense column of P&L record the raw material as 1.2 lakhs or not, whether this is correct or wrong, right? This is the question. So if you have understood the concept of matching principle which you discussed earlier, so we cannot do this. So this is wrong. We cannot enter 1.2 lakhs. So the reason being, to manufacture shoes which are generated is revenue. So we are speaking of only 100 shoes. So for these 100 shoes, what is the cost of material incurred for manufacture of only these 100 shoes? Let us not talk about the 20. That is what matching principle says. For this 100 lakhs, for this 100 shoes, what is the raw material we have incurred? Is it 1.2? No. 1.2 is for the manufacture of all the 120 shoes. But for the 100 shoes, it's only 1 lakh. So the correct way of reporting in the P&L account is raw material of only 1 lakh has to be mentioned as the correct expense, right? And then we'll arrive at the profit of 1.5 minus 1. The profit is 0.5. Had you not considered this scenario and taken directly 1.2, the profit would have been 0.3. That is incorrect. Please understand the concept of matching principle once again. We have to match revenue and expenses. So, for example, I will tell you a simple way to remember this concept. This might sound childish, but this is a good way of remembering this concept. Let us assume that we have manufactured, right? This is the production. We have manufactured 8 items, right? We are into the business of manufacture of, say, computers, and in this year we have manufactured 8 computers, right? This is the production. However, we could not sell all these 8 computers. Let us assume we could sell only the first 5 computers, right? And 3 are left in the godown. These are not sold as at the end of the year, right? Let us assume that each computer is costing 100 rupees. So we have made a total income of 500. So each of these products P1 to P5 is generating an income of 100 rupees. So total 500 rupees is the sale amount, right? Let us also assume that to manufacture this computer, the total raw material cost is 70 rupees, right? So please note that for 8 products we have incurred 70, right? So even though we could sell only 5 products, we have produced 8 products. So even though we could sell only 5 products, we incurred cost in producing 8 computers. So the raw material cost will be 8 into 70, right? Now if we want to drop a P&L account of this company, right? So if we want to drop the P&L account, so this is sales and this is the expenses. So sales is no problem. Directly we are writing what is the sales, 5 sales, so 500 we can directly write. So I told you to write the raw material. I'll tell you a simple way to remember the concept. The simple way is like this. Let us think for a moment that P&L is a prestigious institution. It's going to allow only, right, only those members on the expense side who have contributed in generating the sales. So any raw material that has in some way contributed to the income of the company, only that entry, only that raw material is going to be eligible to enter this particular balance sheet, because that P&L is a very prestigious institution. This is a funny way of remembering, but this is a great way to understand the concept. P&L is a prestigious institution that is going to allow only those items which have contributed to the welfare of the company. So this 500 income which was generated, what the raw materials who have contributed? He has contributed, he has contributed. The first 5 has contributed to the sale of the company. The remaining 3, yes, they went into the production, but they were not sold. They are still lying in the godown, right? The sales were only for 5 products, whereas the production was for 8 products. So these 3 are not actually sold. These are in the godown. They didn't contribute to the sales of this year. Next year they might be sold. That's a different issue. But in this year, they have not contributed. So these are untouchables. So P&L will not admit them into the P&L account. They are not eligible to be entered. So these 70, these three items, 3 into 70 will not be entered. Only these 570s, 5 into 70, 350, right? Only this 350 is eligible to be entered in raw material, and the profit will be 500 minus 350, that is 150. The funny way you can think of all these 8 items, all these 8 into 70, there are 8 number of these 70s. Each of the 70 is saying, let me enter the P&L. I want to come here, but P&L is not allowing every one of them. Only those raw materials that have contributed in some way to the company in generating sales, only they will be admitted. So since only 5 products were sold during the year, so who are the raw materials who contributed to the sales for this year? So this raw material has gone on to generate these sales. So only these 5 are eligible to be entered into the P&L. So 5 into 70 only gets into the raw material side. What about the balance 370s, right? This 370 you have spent amount, right? Since when you are saying we have produced this, we have obviously spent amount, but you are not going to record it in the P&L. This will be transferred to the next year. In the next year, when we actually sell these items, then they will be eligible to be entered into the raw material side, right? Have the concept much more clear. Let us have one more example. Think for a moment you are living in apartments of 1000 flats, right? Of these 1000 flats, 200 families have children who go to school. So at the school, or at the time of school reopening, school children requires new school bags. So that's around June, July. Each of these 200 families will be requiring a bag. Since all this, we are assuming that 200 families have children who go to school. Maybe not every one of them require, right? Maybe not every one of them require bags. So let us assume only 100 school bags. You calculate that the potential for this year is 100 school bags. So what you do, you go to the market, right? You go and purchase 100 school bags. So each school bag is costing 200. So you spend 20,000 in purchasing 100 school bags. Your plan was to sell them at 250 rupees. Since you are living in these apartments, you know each of these residents very well. You are confident of selling all these 100 school bags. So since you'll be selling this 100, once you sell this 100 school bags at 250, you'll be generating income of 25,000. Since your cost was 20,000, you're planning to make a profit of 50,000. So that is your plan. Is the scenario clear? The scenario is you have bought 100 school bags at a rate of 200 per bag. So you have incurred an expense of 20,000. You're planning to sell all these 100 school bags at the rate of 250. So you're going to generate an income of 25,000. So your profit will be 5,000. This is your plan. So what happened in the first day was you could sell only 10 school bags, right? You bought 100 school bags, but you could sell only 10 school bags. So when you draw the P&L account, sales and expenses, right? So you sold only 10 school bags at the rate of 250 and made a income of 2,500. But if you take the expense, you have actually purchased 100 school bags at the rate of 200. So you have incurred a cost of 20,000. And then if you go and calculate the profit or loss, you actually incurred a loss. You have incurred a loss of 17,500. But you know this is a very wrong method of calculation. This is not the correct method. Why? All right, you sold only 10 bags. Fine. But tomorrow you can sell the remaining bags. You purchase 100 bags. Today you could sell only 10. Tomorrow maybe you will sell 20. Another you will sell 50. So in a couple of days, by the end of the week, you're going to sell all 100. So this is not a loss. See, the problem why you are getting loss is on the sales side you are taking only 10 bags. Whereas on the expense side you are taking 100 bags. There is a mismatch. But what the matching principle says, there should not be a mismatch. There should be a correct matching. When you have taken the income for 10 bags, please also take expense for 10 bags. So it should be 10 into 20, not 100 into, sorry, it should be not 100 into 200, it should be only 10 into 200. So 2000 should be your actual expense. So then you will get a profit, 2500 minus 2000. So you actually made a profit of 500. So that is what matching principle says. Please always match the sales and the expenses. By taking sales for only 10 bags and expenses for 100 bags, you're making a mismatch, right? So if your neighbor who is not very good with accounting, he will laugh at you. He'll say, you spent 20,000, 200 bags at 100 rupees, and you earned only 2,500, 10 bags at 250. So you made a loss of 17,000. You fool, you made a you fool, you made a loss of 17,500. But his argument is not true. His argument is true only when you cannot sell the remaining 90 bags. If you are unable to sell the remaining 90 bags, this is true. You have earned income of only 2,500 while the expense was 20,000. But if you happen to sell the remaining 90 bags, then you'll make a profit. So the correct way to calculate the profit on the first day, for the first day you have to calculate the cost of only 10 bags, 10 into 200, right? And the sale will be 10 into 250. So you made a profit of 500, right? So the mistake the neighbor made was in calculating the loss of 17,500 was making the mismatch, right? So, okay, we are saying take the sales of 10 bags at 250, 2,500, and the expense at take the cost of 10 bags, 10 into 200, 2,000, fine. But you incurred a total cost. What about the other 90 bags, right? 90 bags you incurred 2,200, right? So what about this 18,000? So where are you going to show this 18,000? You're not going to show it in the first day. For the first day, you're not going to show the 18,000. You're going to show the cost of only 2,000, right? The 18,000 you're going to take when you actually sell the remaining 90 bags, right? So when you want to calculate profit, you should not take into account the cost of unsold items. Please make this point very clear. Cost of goods sold is a very important term. When you are drawing a P&L account, the sales and the cost, this is the cost of goods sold. Only the goods which are sold only for that goods, only for those goods, what is the cost incurred you have to show in the P&L account. Not the entire cost of purchase, right? Not the entire cost of production, right? Cost of goods sold, only those goods which are sold, what is the corresponding cost you have to show in the P&L account. The cost of unsold goods should not be shown in the P&L account. So sometimes you find the terms cost and expense being used interchangeably, but there is a difference. Expense is only that portion of cost from which revenue is generated. So in the earlier example, we have sold it 10 bags. So the revenue earned is 2,500. So for these 10 bags, what is the cost? 2,000. 10 into 200. So only this 2,000 we call it as expense, whereas the cost is 20,000, right? Because you purchase 100 bags. 100 into 200, 20,000 is the total cost. But expense is only that portion of cost for which revenue is generated. So what we are always interested in is the cost of goods sold. Please be very clear on this term, right? Let us take a small table, which I think we were taking this example earlier, but now this concept will be much clearer. So let us assume that there are 5 scenarios where you have purchased 10 apples and the cost of each apple is 10 rupees. So the cost is 100 rupees. These are 5 different scenarios. In one scenario, you have sold only 10 apples. Other scenario 9, 8, 7, 6. And when you're purchasing at a rate of 10 per apple, you're selling at the rate of 12. So since you have sold only this number of apples, the sale will be 12 into the column B, right? So 12 into 10, 120, 12 into 9, 108, like so on. So please note that when you want to calculate the profit, right? Layman, people who don't know accounting, will be tempted to calculate profit as this column minus this column. This is the sale and this is the cost. So 120 minus 100, 20. 108 minus 108, and they calculate like that and they end up with a loss. So you know this is wrong because you have to consider only the cost of the apples that were sold. Please remember the term cost of goods sold. Only those goods that are sold you have to report the cost. So which are the apples that are sold? Only these apples are sold. For what is the cost of the apples which were sold? So now each apple, since it cost 10 rupees, 10 into 10, 100, 9, 90, 8, 80, 70, 60. What is the difference between this column and this column? This column is the cost of all the 10 apples. All the 10 apples cost we are taking here. Here we are taking only the cost of the apples that are sold, right? So this column reports the profit as per the layman. You're going to get loss in some scenarios, but this is the correct profit. The correct profit is as per the matching principle, right? So this will be the column C, this column sale minus cost of the apples that were sold. So C minus C, this is the correct way of getting the profit. Please go through this table once again. Please be very clear on the concept, because going forward matching principle is a very important concept, and whenever we see the item raw material in P&L account, you should know that we are not taking the entire purchase cost. We are taking the cost of only those goods that are sold. The cost of goods sold is a very important concept. So please go through this table once again. I'm going to repeat it for your convenience. In this example, we have purchased 10 apples at the rate of 10 per apple. So this is the cost of apples. 5 different scenarios. In each scenario we have purchased an apple, so the cost is 100. But we could sell only 9 apples in the second scenario, 8 in the third, 7, 6 like this. So assuming that the sale price is 12 per apple, the sale amount will be 12 into 10, 120 in the first case, and so on, right? So in the last case 12 into 6, 70. So this is the sale amount. So in the P&L account, one column is ready. This column, this amount will be taken from the P&L account, right? So what about the expense? So to take the expense, there are two ways. One is the layman approach. The layman will be taking the cost of as per this column. He'll be taking 100 in each scenario, in each and every scenario, because he'll be saying, since you purchased 10 apples in all scenarios, please take 100, right? 10 apples into 10 rupees per apple, please take 100. That's what he'll be saying. But as per matching concept, you will be saying C minus D. He will say C minus A, but you will say C minus D. C is common, that sale is common, right? But he will be deducting A, that is the 100 rupees. But you will be saying that is not correct. Please deduct D. What is D? The cost of only those apples that were sold. Here only 10 apples were sold, so you can take 100 as the cost. But here, since only 9 apples were sold, please take only cost of 9 apples, 90, not 100 as considered by the layman. Here you take only cost of 8 apples, 80, and then you arrive at the profit. So now you'll get the correct profit. This is profit arrived as per the matching principle, and this is the correct profit, right? So the profit in the last column in the table was arrived by subtracting cost of only those apples that were sold from the sale amount, right? So we'll now arrive at the same profit through a slightly different calculation, right? I will tell you later why we are doing this. You might say, since we obtained this profit, why follow a different approach? I will tell you why we are going to do this later. I'll follow a different method and arrive at the same profit. The profit is not going to change. Still we are going to arrive at the same profit which we have considered. See this profit. This is the correct profit we told, right? This is the profit as per the matching principle. We are going to arrive at the same profit through a slightly different approach. Let us see that approach. And this is the formula we are using. The profit can be calculated through this formula. Sale minus cost of apples purchased plus opening stock of apples minus closing stock of apples. Let us see by this formula, by using this formula, what is the profit we are going to get. So see here. This is the apples purchased, 10 in all case. This is the cost, 100 in all case. Number of apples sold, sale. So number of apples left over. So since we could sell only this number of apples, so let us take the last case. We sold only 6 apples. So the number of apples left over was 4, 10 minus 6. In this case, 10 minus 7, 3. So this column tells the number of apples left over. What is the cost of apples left over? Earlier we spoke of cost of apples sold. Now we are saying what is the cost of these unsold apples? Right, so each cost is 10 rupees, each apple cost 10 rupees, so 0 into 10, 0, 1 into 10, 10, 4 into 10, 40 like this, right? This is the cost of apples left over. Now I am arriving profit through a formula, right? Sale minus, that sale minus is always common. Now I am saying, earlier we calculated cost of apples sold, right? Now we are going to arrive this parenthesis in a slightly different format. B plus A minus F. What is B? Cost of purchase. This is the total purchase. Plus A. What is A? Apples at the beginning. At the beginning, right? And finally minus F. This is at the end. Apples at the end. Cost of apples at the end. Please note that this is the number of apples or cost of apple, since this is 0 in both cases. So profit we are arriving now as sale minus cost of apples purchased, that is B, plus cost of apples at the beginning minus cost of apples at the end, that is cost of apples that is left over. By doing this, you see the profit that we have arrived is 20, 18, 16, 14, 12, which is exactly similar to, see here, 20, 18, 16, 14, 12. So in both the approaches, we have arrived at the same correct profit. Now you will ask, why are you taking this roundabout route? This seems to be a roundabout way of doing things. Earlier way which we arrived at the profit was a simpler approach. Sales minus cost of apples that were sold. Only those apples which were sold, let us take the cost. So this is a direct approach. So why are we taking this roundabout approach? The reason is, in the actual P&L account, you will not find this item, cost of apples sold. In an actual P&L account, you're not going to find this. Okay, sometimes companies are going to provide this, but I'm telling you, if you don't find this item, there should be a way to calculate this. But these three items, B, A, F, purchase cost is going to be provided. A and F, that is the opening stock and the closing stock of the material that is available from the balance sheet. So in scenarios where you don't have directly this figure, what is this figure? This is nothing but consumption. Please make a distinction between consumption of raw material and purchase of raw material. These are two separate terms. What are they? Purchase of raw material and consumption of raw material. What is purchase? This is purchase. How much amount we spent in purchasing these 10 apples? See, we didn't sell all this. That's a different matter. But we bought all this. So this is a purchase amount. What is consumption of raw material? Only those apples that were sold. The cost of the apples which was sold, only that is the consumption. Right? So for example, you are a manufacturer of aluminium. So the raw material is alumina. Alumina is a raw material. So the alumina which you have taken as raw material, you have purchased 100 tons. But by the end of the year, you could use only 80 tons. So 20 tons is in the go down. So out of the 100 tons of alumina you purchased, you employed only 80 tons into the production process, and the 20 tons is in the go down as raw alumina. When you speak of the terms, this 100 tons is known as purchase, whereas this 80 is known as consumption. Right? Purchase is the total amount, whereas consumption is what is actually consumed. Out of this 100, only 80 was consumed, right? So consumption and purchase, please make the distinction between these two terms. So the point I am trying to make is, whenever in a P&L account, to arrive at the correct profit, sales minus raw material consumption is what you have to consider. But in cases where you don't get this figure directly, there is a way to calculate, and that is purchase plus opening stock minus closing stock. And these three are actually available in the P&L balance sheet. So if you don't get this consumption figure, you can arrive by purchases plus opening stock minus closing stock. So by using this formula, in cases where you are not given directly consumption, you can arrive at the consumption figure, right? So the formula for consumption is purchases plus opening stock minus closing stock. Purchases anyway you're going to get from the P&L account. This opening and closing stock you're going to get from the balance sheet. So please note that if we are in the financial year 2011-12 and we are considering the financials for the year ended 2011-12, that is 31/3/2012. As on this date, in the balance sheet will be providing you the closing stock. Under the assets head, you will be, please note that we are going to discuss this in the later chapter. We are not yet come to the part of balance sheet, so this might be confusing to you, but just follow along. No problem. We are going to have a revisit once again. So in balance sheet, you have an item called closing stock. So to use this formula, we said you need a purchases, opening and closing. Purchases is available in the P&L account. This opening and closing you can get from the balance sheet, because closing stock is an item in the balance sheet current assets. So this figure you can take. Opening stock is something, for example, 31/3/2011, the company closed with the stock, has also closing stock. So this closing stock is nothing but it's going to be the opening stock for the next year. So the closing stock of 31/3/2011 is nothing but the opening stock of 1/4/2011, right? So in other words, the closing stock of financial year 2010-11 is nothing but the opening stock of financial year 2011-12. So even though the balance sheet provides you just the closing stock figures, you can get the opening stock also by seeing the last year figures, and usually balance sheet gives the 2 years figures side by side to enable comparison. So you can get all these figures, purchases, opening, closing. So you know where to get these figures. So this is an example which we already discussed. This is a slightly modified version of the example which we already discussed. In the earlier example, we spoke of an aluminium plant, and which raw material is alumina. This is a slightly different example in the sense that there is some opening stock of alumina. So as on 31/3/2011, there is a stock in the godown of alumina worth 100 units. Right? 100 units of alumina is available in the godowns. So during this year, the company has purchased 1000. See, this is not 100, this is actually 1000. So during the year, the company has purchased 1000 units. So, and at the end of the year, it was left with 200. So if we actually want to calculate the consumption, please note that we are not going to take the purchase as a raw material in the P&L account. What we are interested in is the consumption. Purchase is not that important, right? What is important is the consumption. So how you arrive at the consumption? Consumption is purchases plus opening stock minus closing stock. So what is the purchase? 1000. What is the opening stock? 100. What is the closing stock? 200. So 900 is the consumption. So even though you purchased 1000, you utilized only 900. So in the P&L account, under the head of raw material, you're going to take the cost of this 900 units only. Is it clear? You're not going to take the cost of 1000. You're going to take the cost of 900, right? So see this small table. So here the opening stock is same in all scenarios. The purchase is same, but the closing stock, if it is different, right? If the closing stock is different, it means that what it means? It means that during the year the company has consumed different amounts in each of the scenarios, right? The opening stock and purchases are same, so but the ending is same. The ending is different. What it means? That during the year for the production process, the company has consumed different amounts. And how you get the consumption? The formula of purchases plus opening stock minus closing. Please see the consumption was different. So in each of these 5 scenarios, the consumption was different, and therefore you're getting a different closing stock in spite of having the same amount of opening stock and purchases. So please note that from the point of view of P&L account, whenever we say raw material, we mean the consumption of raw material. We are not interested in the purchase of raw material. If consumption is directly given, fine, go ahead and enter it in the CMA data. If purchase is given, please use the formula purchase plus opening stock minus closing stock to arrive at the consumption. Only enter the consumption figure in the P&L account, right? So companies usually give this raw material consumption. You're going to see in your actual careers when you're given the P&L account of company. Usually they give the consumption figure. So in case where they don't give you have to use the consumption. You have to use the formula to arrive at the consumption. But anyway, even if companies give the consumption figure directly, you should know what it actually means, right? You should actually know. You don't confuse it with purchases, right? If you don't know this concept, the concept which you discussed in this chapter, you might think that the figure of raw material appearing in the P&L account is the purchase. That's not correct. When companies in the P&L say raw material, without mentioning whether it is consumption or purchase, it means actually it is consumption. So they have arrived at the consumption directly reporting the consumption. So whenever you see raw material from now on in the P&L account, please note it's the consumption. It is not the purchase, right? So we are taking this example. We have already started with this example of Maruti Suzuki. We have already entered the items related to income in the CMA data. Now we are going to enter the items related to raw material in the CMA data. So please note that this is extracted from P&L account of Maruti Suzuki. So under the expenditure, we have various heads. We have not come to this depreciation, finance, and employee cost. We're going to come them. This opening stock, closing stock. We're going to come at the later stage. Right now, we're interested in this item, cost of material consumed. And there is a schedule for this 44.1. That 44.1 is also reproduced here for your ready reference. So that amount of 26707 breakup is between imported and indigenous, right? So as a percentage, 89% of the entire consumption was indigenous and 11% was imported. So CMA data also has this provision for not just for sales. Sales anyway have this breakup between domestic sales and export sales. For raw material also you have this provision for domestic raw material and imported raw material. So let us go ahead and continue filling our CMA data. The cost of raw material consumed is this 267,070. We're going to enter in the CMA data. So 26707, right? So this is the raw material consumption which we have to enter for Maruti Suzuki. Please note that this raw material is raw material consumption, not the purchase. And we are in this case from Maruti Suzuki, we are directly given the consumption figure. So we have entered directly 26707. So with this we have come to the end of the chapter on raw material. So far we have completed 2 items in CMA data, the imported items, that is sales and raw material. So in the next segment we are going to discuss some other items, expense items in the P&L account.